Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Ardani Imam Rashid. And today I'm gonna talk about capital structure analysis. Definition of capital structure. According to financial expert E.M. Pendy, capital structure refers to the mix of long-term. Structure refers to the mix of long-term sources of funds, such as debentures, long-term debt, preference share capital, and equity share capital, including reserve and surplus, and equity share capital, including reserve and surplus. Financial expert John G. Hampton states that capital structure is the combination of debt and equity securities that comprise the financing of company asset. Financing of the company asset. Another definition, capital structure is the balance or ratio between own capital and foreign capital. In foreign capital is short-term, the ownership of the company, while foreign capital is in the form of short-term and long-term debt. Next, capital structure function. Maximizing returns, reduce financial risk, minimize cost of capital, optimizing fund utilization. A well-designed capital arrangement provides scope to increase earnings per share so as to maximize returns to equity shareholders and restore the utilization of funds, thus maximizing returns to equity shareholders and recovering the cost of borrowing. Borrowing costs, the correct structure can balance the debt and equity of the business. In doing so, it can help the company to manage and reduce financial risk. The capital structure can provide long-term debt, capital planning for the company's strategy. A good and systematically organized capital arrangement helps the company in generating optimal output from the funds. Products optimal output from the funds are available to the firm. And next, assisting corporate tax planning flexibility. For companies that opt for debt funding, good capital management can help tax deductibility of benefit and saving thereby reduce borrowing costs. Corporate tax optimization can be done by using applications such as online pajak. As a service provider Tax Online has features that can optimize corporate tax and avoid risk. Optimize corporate tax and avoid the risk of non-compliance so as to maximize the company capital. A good capital structure can facilitate the expansion of contraction of debt capital to suit the company's strategy and condition. Debt capital to suit the company condition. And next, solvency. enhancing company value, good structure management, and help maintain the liquidity of the company, because unplanned capital can lead to interest payment expense, which can reduce the company cash. A healthy capital structure can attract investor attention to invest in a company, therefore can increase the market value of stock and security. Next, theory of capital structure. Traditional approach theory, trade-off theory. This theory states that there is an optimal capital structure. This means structure has an influence on firm value, which structure can change in order to get the optimal firm value. Optimal firm value. This theory determines the optimal structure by including factors such as tax, agency costs, or financial difficulty. Financial difficulty, however, it still maintains an assumption of symmetric information and market efficiency, so business will think of save and on tax and hardship costs on finance. And next, Modigliani and Miller theory approach, pecking order theory. Again, C theory. This theory is named after its originator, Franco Modigliani and Merton Miller. This theory is divided into two, namely the theory without tax and theory with tax. This theory states that a higher profit level of a higher company will have a smaller debt level. Debt level, especially companies, have an order of preference in the use of funds. This theory states that the structure is created to reduce conflict between groups. And next, asset structure tangibility. Growth opportunity. According to Weston on Brigham, asset structure is the balance or ratio between fixed asset and total asset, or the ratio between fixed asset and total asset. Then there is also, according to Shamsuddin, that the structure of asset is the determination of the amount of allocation of funds for each component of asset, both fixed asset and current asset. Current asset growth opportunity is the company opportunity to grow in the future. However, according to Cartini and Arianto, growth opportunity is the change in total asset owned by the company. Is the change in total asset owned by the company. And next, how manager decide capital structure. To be able to decide on the ideal capital structure for the company, manager analyze the cost of capital using a weighted average cost of capital calculation. The weighted average cost of capital is the average after-tax cost of capital of all sorts of funding, such as common stock, bond, and equity. The average after-tax cost of capital from all sorts of funding, such as common stock, preferred stock, bond, and other types of debt. Weighted average cost of capital is the method used to determine the required rate of return, RRR, or minimum profit, which is used to pay the cost of capital. Profit, which is later used to pay the cost of capital. To be able to calculate the weighted manager needs to analyze the various costs on all components that exist in the edge of this funding method. Is also considered a cost that must be paid to attract investor, be shareholder or bondholder. Shareholder or bondholder, the greater the weight, the greater in interest. Last conclusion, we can understand the capital structure as the ratio that occurs in retained capital with equity, capital ownership, both short and long term. The purpose of the capital structure itself is to be combined permanent and current source of funds for company operation. This can be realized if the company has good capital structure management. Capital structure management, both internal and external financial condition will be maintained safe so that the company will avoid bankruptcy. Financially maintained will also avoid external debt or loans. Is it hoped that companies can have significant progress financially by understanding the capital structure, while financially by understanding good capital structure. And thank you. Wassalamualaikum warahmatullahi wabarakatuh.